Below 61K, boys. Hold on for dear life. Digital credit's gotten crushed over the last week. Eve, quick vibe check. Let's go around the horn.
Oh, wow. Yeah, I mean, I was quite feeling bullish. Now I see that we're falling again. I see behind you the block clock that is saying before under 61K. Last I checked, we were still at 63. So yeah, but no, I think overall still excited of what's coming. Very excited about the news yesterday. STRC going semi-monthly, right? I think I was a bit fearful that that wouldn't go through because of how Saylor and Feng Li were promoting it, and we know how hard it is for shareholders to do those. To go vote for these types of things in shareholders meetings, so that was a little bit the fear that I had. So that is quite exciting news in my opinion. And I mean, Strive going nuts with 32 Bitcoin bought. That was amazing as well. I mean, these guys are crushing it. So yeah, super excited.
It's a great meme. Yeah, 32 Bitcoin, new meme.
I think we can't hear you, Tyler.
Do you have me now?
Have you? Yeah, we got you.
All right, great. Yeah. Let's go around the horn. Quentin, and then Chase, you can follow. Just give us a quick vibe check, what you're thinking about, and we can dig into this thing.
Yeah, I think it's a brilliant marketing move by Strive to buy back the 32 Bitcoin that made such a noise last week when Strategy sold them. At least we know who bought them. And yeah, I think it was great to see Strategy buying back Bitcoin this week. They bought 50 times more Bitcoin than they sold last week, but it almost didn't make any news. So you can really see that the sentiment is really bad right now. And yeah, the actual numbers and math doesn't really matter right now in this environment. It seems like. And we also had the news of them raising their USD reserve back to 1 billion. So I think a step in the right direction there.
Yeah, and I'd say selling or using some of the USD reserve and selling the 32 Bitcoin, it's being blamed a lot for the recent price drop. But I do think there's a pretty big rotation out there getting ready for things like the SpaceX IPO and some of the AI company IPOs. So that rotation was going to happen ahead of these IPOs anyway. So I think that's part of what we're seeing as folks try to get their hands on some liquidity to get into those. I think a lot of people think that STRC is a stable coin and that it's supposed to be pegged at 100 perfectly. So that's not the case. And we already see price starting to make its way back up towards par. I'd expect it to, at the worst, take a month to do so. So, but yeah, I mean, Saylor seems to have heard the market and added back to that USD reserve, which we were fairly critical of, using those proceeds on the last conversation that we all had together.
Yeah, I think Sailor and team obviously took our advice and stacked some more of the melting ice cubes, right? Yeah, it's really interesting. Strive seems pretty laser focused on maintaining that 18 months of dividend coverage, and they're kind of stacking that proportionally as a signal to credit raters, where strategy I think is a little more I don't know, maybe you could say a little loosey goosey or nimbler on the strategy there. I'm okay with it, but I think eventually, as a signal to investors in the marketplace, they're going to have to come up with something maybe that's a little bit more reliable, especially if they are targeting the credit rating agencies. What do you guys think?
Yeah, I fully agree with that. I think especially if you contrast or if you compare Strive to Strategy, the contrast is quite apparent. As you mentioned, the Strive has from the beginning they've set up the USD reserve, and they're very consistent and disciplined about keeping it at 18 months, right? Every time they issue SATA, they park part of the proceeds in the USD reserve to really keep these 18 months of run rate, even as SATA is scaling, right? And on the other hand, you have Strategy that didn't have a reserve when they started off. Then they started to implement one after Strive's model at the end of last year, and then the guidance was not super clear. What is the target? Is it 18 months? Is it 24 months? Is there a target? I think at some point in the earnings call, they said they wanted to keep the 2.2 billion that they built. And then we had a surprise announcement a few weeks ago that they repurchased their convertible notes of 2029 with that cash reserve. So drawing down 1.5 billion of it out of nowhere, basically. And yeah, it's just not been very consistent, and Strategy usually is very good at and transparent at communicating what they do, right? And they still are, except on the USD reserve. For me, this is one point that is a bit confusing, and I think especially if you look at a potential buyer of Stretch, right? A conservative investor, a retiree who is thinking about investing in STRC, and one of the main selling points for him is the cash reserve, right? That at least 18 months of cash is there. He's secured for at least that period of time. 1 month ago, decides to go and buy Stretch, and then all of a sudden this reserve is melting away, right? To cover the convertible note, and now we're sitting at 6 months. So maybe for this investor, not a very pleasant thing to see, and bringing uncertainty for, I assume, for certain more conservative investors, right? So yeah, I think that's a fair criticism here at this point of how they have handled the communication and the management of their USD reserve.
Yeah, those are some great points. And maybe just to add, because while they were repurchasing the convertible notes, right, they could have had the option to sell the STRC and stash some cash, because they already knew that they were going to rebuy this convertible note. But instead, they bought 25,000 Bitcoin, right? And they went ahead with that. So it's not like, I think they had the option to actually do that. Obviously, we don't know what they're looking at and all the data they're looking at as well. But at least from our perspective, it is a bit confusing. And it's a great point. I mean, as a Bitcoiner, you don't care whether there's a USD reserve or not. It's really for these other investors that are looking at a stable STRC, that there's a cash reserve that just gives them confidence. And I think we saw around that time as well STRC depeg, right? So, I mean, obviously we mentioned last week SATA stealing a bit of STRC's thunder, but I think that might have been also a contributor to STRC depegging.
I think the most generous interpretation of using the USD reserve to buy back the converts at the same time as selling the 32 Bitcoin, the most generous interpretation would be, well, hey, we're inoculating, Saylor's word from the earnings call, the market to the idea that we can sell Bitcoin when we need liquidity, and that it doesn't, somehow automatically unwind the entire strategy balance sheet 1 Bitcoin at a time. And I guess if your strategy, you're saying, look, we proved that we can sell the Bitcoin, so why do we need a USD reserve anymore now that we've broken the glass and shown that we can sell Bitcoin when we need to come up with USD? If that is the new thinking, it would require a much better communication plan to, talk to the folks that are relying on the STRC dividends, that, hey, this is our plan going forward, or, these two things are in tandem. By proving that we will sell Bitcoin when we need to, we no longer need to have a USD reserve. But that's just not what the communication has been. The communication from the last earnings was, no, we can do both. We can sell Bitcoin and we should have a USD reserve, which we plan to, begin adding to again over time as the increased STRC issuance requires a greater USD reserve in terms of months or years of runway. So that would be like the most generous interpretation. But even that, I got to wonder what the what it's like to be sitting on the investor relations side of strategy right now. It must have been a pretty chaotic month.
Yeah, yeah, definitely. I do wonder about the like liquidity profile of these converts. Maybe you guys can help shed some light on that. Is this something where they have to kind of go in size to retire some of these converts and negotiate a price because there's not a ton of liquidity necessarily in the market? Or is this something like if they could go on a smoother retirement curve of retiring these converts as we go, as we approach 2029, 2030, do you think that approach makes more sense, or is it probably just too costly?
I don't have much insight there.
Yeah,
I've
that's something I'd like to know.
never
Yeah,
bought back billions of dollars worth of convert. Never
yeah,
been
it might be a good
in that
question for
room.
the next strategy earnings call. I think maybe we can get a question on there to see that why are we signaling we're buying back these converts 3-4 years early, a big tranche of them. Does would investors like it better if they just added as time goes on? Kind of the same way I think investors would react to managing a more stable USD reserve. Questions I have certainly for strategy, and hopefully you can get clear on that. Maybe we can send an email out to the investment team. I'll flag that on the calendar. Maybe we'll have an answer for next week. But yeah, yeah. I guess seeing strategy. I think it traded down to in the $91 range. STRC traded down there, $91, $92 briefly. It rebounded. It's back down a little bit today. Kind of, I would say, trading a little bit in tandem with Bitcoin's price. This isn't what I expected. As strategy announced the STRC dividends going semi-monthly. My base case was, we had Bitcoin chopping around, I guess, for a couple months. It was trending higher. Stretch was, ATMing a ton of cash. SATA was ATMing a ton of cash, and SATA at the same time, strategy is going to semi-monthly dividends on Stretch. SATA is going to daily dividends here on June 16th. So, my read was, the market's going to react really favorably on this news, and we're going to get a week or two of ATM prints on both Stretch and SATA. That looks unlikely now heading into the ex dividend. Time will tell. A week sometimes feels like months in Bitcoin land. But is that just a function of Bitcoin's price? Like, can we really read anything into how the market's valuing Stretch and SATA, or do we need another week or two to really have some authority on that, Eve?
Yeah, I think we're going to need even longer, to be honest. I mean, looking at how they traded, obviously, the last week with the price of Bitcoin going down. Obviously, it's great news, again, to have STRC going semi-monthly. It's great news to have SATA going daily. And I think they're going to be doing great. But I think it's going to take a bit of adjustment to the market to really fully grasp what is happening here. And I suspect that, yeah, we won't see like stability right away. Maybe it takes another few weeks or even a month or so to really start seeing the fruits of this labor that the strategy and the Strive team have put in here. And yes, so I don't think it's going to be immediate. I think there's going to be a lag. But it's still good to see that this is all coming together now in June with both products making a shift actually in the digital credit era.
Yeah, sorry to jump in, Quentin. But one thing that I think many people need clarification on is that when STRC depegs or falls below $100 par, it's not like the instrument is broken. Now, it's true that strategy can't or shouldn't be issuing any new STRC to buy more Bitcoin unless we're at $100 par or $100.01. But all it means really when STRC is below 100 is that the people buying it right now are getting a higher than 11.5% effective yield. So that's all it is. It's not broken. People can buy it. In fact, there's an opportunity for people who believe that it's going to get back to $100 and want an above 11.5% yield. Well, they're getting that right now by buying in at this discount, and that drives the price back up to $100. So This is designed in a way where it has the self-correcting mechanism. Nobody's being hurt. A new net buyer of STRC today, you could argue, is making out like a bandit, as long, again, as you believe that STRC will continue to pay out the dividends now bi-monthly. So I just think people need to realize this is the goal of STRC. As much as strategy would like it to stay at $100 peg so that they can be above that from time to time in ATM or issue new STRC shares to raise capital to buy Bitcoin, it's not a broken product. It's just a higher effective yield for a temporary amount of time.
You're muted, I think, Quentin.
Quinn, yeah, we're not hearing you.
Oh, sorry, I was mute. Yeah, so and that makes the product more attractive to yield investors, right? That's the beauty of the product. If it's not at par, it's more attractive. It has a more attractive yield, right? And yeah, I think what we've seen, at least now, as long as STRC has existed, is that when Bitcoin is in free fall, it depegs massively, right? And that's what happened last week. We had Bitcoin severely down over the week, accelerating downwards on the Friday, and that's where it bottomed at $91, right? And now Bitcoin is not necessarily up; it stopped going down, and already you see STRC recovering, right? So it's yeah, we're seeing the big downturns when Bitcoin's in free fall, and when Bitcoin's going up or is flat, the instruments recover. So it is still heavily influenced by Bitcoin for sure, at least in the short to midterm. I think that will stay that way.
I'm curious, what do you guys think about the dilutive common equity issuance? Like if you're an MSTR shareholder and there's a trade like this last week where it's technically dilutive in terms of Bitcoin per share, but it increases the USD reserve, which increases the attractiveness of STRC, which is your big forward-looking engine that you want to be as attractive as possible if you're an MSTR shareholder. How do you guys think about the cost benefit there of like, okay, yeah, there may be, once a month or once every couple of months, a net negative Bitcoin per share trade for me as the common equity shareholder, but that's always in the service of increasing the attractiveness of STRC, which then scales it and allows me to benefit on the following trade. How do you guys think about that?
Yeah, I agree with it. With that same week over week, mathematically, it's not a good deal, right? It's negative for Bitcoin per share. It's negative Bitcoin yield. But if you look at the long game and the long term, where the main goal and that strategy's stated main goal is to have STRC being a successful product, right? And yeah, the USD reserve will probably make it more successful, more safe, right? And but that's also why the criticisms comes back in, right? Is that they wouldn't even need to have those dilutive weeks if they did it the way Strive is doing it, by just parking part of the issuance of STRC directly into the reserve, right? But because now when they set up the USD reserve at the end of last year, they had 2 weeks of massive Bitcoin per share drops, because they issued more than $1 billion in common stock to basically just build the dollar reserve. And now last week was also dilutive. So it's a negative, it's a negative news that are out there that you don't have on Strive, right? Because they're simply very disciplined. They just park part of their proceeds from SATA directly into the reserve, and it's not dilutive that way.
So you would want strategy to only grow their USD reserve through STRC issuance?
Yeah, well, first they need to build it back up to have the 18-month runway, and this will be dilutive most likely, and then from then on just keeping it at the 18 months by parking part of the STRC issuance in it.
Yeah, I think I'd like to see some guidance on, it doesn't have to be an 18-month runway, but some sort of like, guardrails on what the runway is. I think that's a crucial point, because then, qualitatively, like the thought from strategy is they're just going to be able to buy more Bitcoin this way. I'm sure there's people out there running numbers on, whether or not it makes sense. Maybe the big brain strategy from Saylor is that they're trying to increase volatility, and yeah, the stock will get crushed here, but like it's going to bounce back when Bitcoin's price bounces back, when Stretch gets back to par. But yeah, I'd rather them come out and say, hey, we're gonna maintain this U.S. dollar reserve, even if it's a wide range of outcomes from 10 months to 36 months, some sort of barriers. I think the sweet spot is maybe 18 months to 24 months of USD reserve, but still maintaining some optionality so they can deploy cash to retire maybe some converts when it's more accretive, when they can get better terms on those, to buy Bitcoin, maybe when there is a bit of a dip in price. Having just like some flexibility there, I think, is like the key thing. And yeah, reducing Bitcoin per share, um, like over the short term, is like mildly annoying, but we know the team is laser focused on accreting Bitcoin per share over the long term. But it does open up, like Quentin said, just fodder for bears to step in and come in, people to trade on that, and I just would like to see some firmer guidance on what the USD reserve is there for, and how much of a runway is realistic. And I think they're still feeling that out. They're going to get feedback from the market. They're going to get feedback from people rating the credit, and I think we will see that in time. It's just kind of hurry up and wait.
Yeah,
Yeah.
exactly. And you pointed out the fodder for bear, right? And the bears came out on yesterday saying, yeah, it's dilutive, it's dilutive. But yeah, putting aside the USD reserve issue that we just mentioned, I think that's one of the biggest issues with the bears is they're always focused on this one little thing. They don't have the full context. Like they need to look at the full story, right? Because when you think about the dilutive nature of the issuance yesterday, okay, yes, it's dilutive on the short term, but it's going to help STRC in the long run, right? Again, having the USD reserve going a bit, or getting a bigger USD reserve. Also, whenever you get more Bitcoin in the balance sheet, it strengthens balance sheet, right? Because again, those bears are also Bitcoiners, and I do believe that Bitcoin is going up over time, right? And maybe that's where we can also segue the discussion on Brian's Brookshire Schrodinger's Bitcoin, right? I mean, how can you have how can you say that Bitcoin is going up in the long term, that it's going to be 1 million, 10 million, and so on, and think that Strategy, Strive, and all these Bitcoin treasuries that have a useful product are not gonna be successful? This is a question, and yeah, I don't know if you guys have any insights on that.
Yeah, just to clarify for listeners, because we've talked about this offline a bit, the idea that you believe as a Bitcoin maxi that Bitcoin's compound annual growth is going to be 25, 30%, whatever it is, if that compound annual growth over any kind of 10-year period outpaces the dividend yield, then you should have no reason to believe that this all blows up. The only way that this blows up is if Bitcoin over a long-term, like 5+ year period, underperforms the dividend yield, and then they have to start selling Bitcoin. But even there, we have 30 years worth of dividend obligations on the balance sheet at Strategy right now. So it's this kind of holding two thoughts that contradict each other, that I believe Bitcoin's going to perform at, 35% compound annual growth rate over the next decade. And I believe that 11.5% cost of capital is too high and Strategy is going to blow up. You like, there's a lot of people out there that somehow are holding both ideas simultaneously.
Yeah, I think so. Yeah, there's been a lot of chatter there, over the last couple of weeks, and I don't know. Let me bring up another tweet here from Steve Barber, who's been kind of in and around talking about this. He says, Steve says, you got to admit the pure play Bitcoin Treasury business seems like a lazy grift. There's zero benefit to stakeholders over self hodl, risk adjusted. Any market premium to stack value is a fleeting arbitrage based on narrative. There's no long term play. Management is rent-seeking, offering zero stakeholder value. These companies should really be managed by bots for free. The stakeholders are surveilled and tax farmed at best. At worst, they're going to get fractioned due to the mismanagement of the coins. And yeah, I think like this kind of mentality is just like really missing the mark, and it's assuming that like there's never going to be any other operational play, or that having a large Bitcoin stack offers any optionality whatsoever. It's like a really zoomed in, like Peter Schiff level take where he'll come in and say something bearish about strategy, like, oh, it's the end of time. Bitcoin's dying for real this time. When it's crashed, 50%, like 6, 7, 8 times in its history. Or if strategies, you look at the 1 year chart on strategy, and yes, anyone who bought the Pico top is getting wrecked as a shareholder. Anyone who bought maybe 6 months earlier is doing really great on their position. So yeah, it's just a matter of time frames, and like Bitcoiners of all people should understand like low time preference and zooming out, right? We've been through every Bitcoiner who's held through like 2013, 2017, even 2021 has been through like a massive 80% crash. So it's like, what are we doing here? I just like, again, I think we mentioned it on last week's stream. It's like people who have this take almost like there's never an equity they'd ever invest in, and that's fine. Like if Bitcoin and self custody is how you're storing all of your wealth, all your excess cash, great. Like I doubt most people are doing exactly that because people want to buy a house, people want to live their life, and there's always like some other assets in there. That's my mentality. Like as an investor of strategy, Bitcoin is still my hurdle rate, right? I wouldn't be buying an equity unless I thought it could outperform Bitcoin, and the increase in Bitcoin per share is what we're after here. But yeah, it just reads to me like these. Like I remember talking to Jimmy Song about this, and I don't think he's weighed in a lot on this discussion maybe recently, but he just his mentality. He was one of my first interviews on my old pod, and he just thought capital allocation was something that isn't going to exist in a Bitcoin denominated world. And I just think there's a fundamental disagreement there, is that there is room for capital allocation, there is room for investment. If investing in equities, people building businesses is always going to exist, right? Whether your money's inflationary, deflationary, or what have you, like there's always opportunity there. It'll look a lot different, if you're using a super inflated fiat currency that gets debased year over year versus a scarce asset like gold. But there's always been investment. There's always been capital allocation by capitalists throughout history, and I think that's the fundamental disconnect. What do you guys think?
Yeah, I would jump in there. So one of the things that makes me think of is the move that we've seen from OG Bitcoiners selling their Bitcoin to get into the ETF. And so, I think this idea of I want to self custody all of my wealth as a person makes sense up to a certain dollar amount. I think what we've seen from OGs selling to own the ETF shows that at a certain dollar amount, holding all your wealth at your fingertips becomes something that can become uncomfortable. I'm not saying you shouldn't always have some amount of Bitcoin in cold storage, but if the OGs are an example to what the normies who stacked one Bitcoin might be thinking 10 years from now, it's that maybe that's a lot of wealth to be holding at your fingertips, maybe more than you're comfortable with. And so securities, holding a centralized ledger can actually become valuable to some degree. And then, to the Twitter post there, which is, we hear this a lot for critics of strategy, which is, why not just buy Bitcoin yourself? If you're interested in the arbitrage, why not just buy Bitcoin, borrow against it, and buy more Bitcoin, and do it yourself? But the assumption there is always that because then you get to self-custody and hold your own Bitcoin. But as soon as you go to perform the arbitrage and borrow against the Bitcoin, you've now given up custody of your Bitcoin again. Now you've lost your custody. You're providing that Bitcoin as collateral to whatever the Bitcoin-backed lending party is. And now you're also open to margin calls and liquidation risk that you don't get as an MSTR shareholder. Now, you could say over a long term, you have margin call liquidation risk as an MSTR shareholder because the whole strategy model could fall apart, but you never have day-to-day price swing, margin call, liquidation risk. And even if you're going to do that, like I just go buy Bitcoin yourself and borrow against it, you've now also given up custody and sole ownership of the Bitcoin. It's in the hands of the custodian because that's what they need as collateral to lend against. So it's just not as straightforward as many people think when you actually think through how would I replicate the trade.
Right. The ease of buying, someone who's running this strategy in your brokerage account versus setting up that Bitcoin collateral loan. Like there's so many failure points and yeah, wouldn't it be a great world where 8 billion people can figure out how to do that? But that's just not the case, right?
Yeah, and as a company, you just have a lot more options. I mean, we saw the Bitcoin Treasury companies go through this evolution, right? With first taking on collateralized loans, like Strategy did in 2022. They almost blew up because of that, right? And then they changed their strategy and they went for convertible notes that are non-collateralized. And then they ended up with those preferreds where they don't have to pay back the principal at all, right? And you as a private individual, you have no way of doing this financial engineering. And if you borrow against your Bitcoin, well, it's you have a risk of liquidation that those companies don't have, right?
Yeah, and maybe just to come back to the Schrödinger's Bitcoin. So the only perspective I see from somebody that thinks like that, where they think, well, strategy is going to fail, but Bitcoin's going to succeed, is exactly the counterparty risk, right? That's the one thing, right? Because obviously now they have their Bitcoin in with a custodian. You don't probably like I expect that the custody risk is minimal, but it's still there. But even as Chase pointed out, right, when you hold your keys, there's also a risk. The custody risk remains. You're just swapping the custody risk from losing your own keys to the custodian losing their keys in a way or another, right? So that still exists. The other thing is obviously the confiscation from governments and things like this. So there's additional risks as well, which we need to consider. And obviously, I think right now it's in the tail risk. Probably this probability goes up over time, and that's something that you need to assess over time. But as of right now, I think the probability is rather low. So these are probably the small cases where you could say, okay, strategy fails, but Bitcoin succeeds, and that's fine. So just to do a bit of devil's advocate in here for that. And yeah, going back to the point of Chase and Quentin, right? I mean, if you want to use your Bitcoin, like if you have it in self custody, then you can't really do anything else, right? I think now with those Bitcoin treasuries, you don't need to go to the ETF, because the ETF, they also drain. There's a leakage, right? You have the fees that are, I think, like 25 bips for a BlackRock ETF. Why not just go into a treasury strategy, into a Bitcoin treasury company where you can actually even beat the hurdle rate, as Tyler, you pointed out, right? Because they're accruing Bitcoin over time, so you expect it to grow their stack of Bitcoin. So there's a lot of use cases. And maybe the last point I would make is again, going back to what you mentioned about Jimmy Song, right? The capital allocation. I think that's very, very important, because what the Bitcoin treasuries are doing, specifically Strategy and Strive, through the issuing of the digital credit, is they reallocating some of the credit that might be misplaced, right? There's misallocation everywhere right now. You saw the private credit, you don't know what it is. It's all, Jeff Walton always points this out, right? Like, you don't know what there is behind, you don't know like it's trapped in there. Potentially it's all companies that are zombie companies, you have no clue. And there's a lot of malinvestment all over in all places there. And I think those treasury companies will actually bring back some of the capital, for example, into Bitcoin and other potential use cases. So maybe you say, oh, digital credit is not providing any value to humanity. I would argue the contrary here, because by doing so, you're just bringing back, again, the capital to a proper investment. And again, Bitcoiners should understand this better than others, because they see the value in Bitcoin. So I understand if somebody that doesn't believe in Bitcoin says that, fine. But for Bitcoiners to say that, I'm still trying to understand how they don't see that yet. So yeah, I don't know if you guys have thoughts on that.
Yeah, I have a few things on that. So one thing that we didn't even touch on is the idea that when you own shares like MSTR instead of Bitcoin, you can borrow against those shares often at much lower rates than what we currently have in the Bitcoin-backed lending space. Not to mention, less of a custody risk because you're borrowing against your shares, which are centralized, so that you can't really whoever's lending you the money is not going to misplace the shares. And then when it comes to how does Bitcoin win, but strategy fail? And if you're being, honest, you have to say, yeah, there is custody failure risk. A lot of the people who say, yeah, there's custody failure risk are also out there saying that they should be doing proof of reserves. But if you think about it, how does, providing proof of reserves, does that increase or decrease their risk of custody failure? I would argue it increases the risk of custody failure by doing proof of reserves, because now you've told the world exactly where your Bitcoin is and which custodian they should be, prioritizing any type of soft or hard type of social engineering attacks toward. And then, at the very end of the day, when you look at participating in MSTR as a common equity shareholder, you're just saying, hey, I want to participate in a trade that has dollar liabilities in exchange for Bitcoin denominated assets, because I believe, as every Bitcoiner does over time, that the dollar will lose value and the Bitcoin will appreciate over value, and that gap creates a greater and greater gap of value, and that will somehow accrue to the MSTR common equity. And I think, we look now at Strategy's capital structure, and you have the converts, you have STRK or STRF, then you have the preferreds, and then you have MSTR, the common equity at the bottom. And a lot of people look at the capital structure and they say, I could understand why you'd want to own the converts, or I can understand why you'd want to own, something higher up in the structure where that you're going to be able to get your money out in a worst case scenario because you have, you're at the top of the waterfall. But the whole point of owning MSTR is that the upside surprise, the surprise where Bitcoin's compound annual growth rate does outperform the 11.5%, and maybe it surprises, and instead of a 25% CAGR, we get half a decade of 50 or 60% CAGR. That upside surprise accrues to the common equity and the common equity only. None of the other vehicles really benefit from a bullish Bitcoin CAGR.
Yeah, that's a good point.
Yeah, that's why you also have to. We talk a lot about the downside risks, right? But what are the upside? What is the upside potential? Right.
The upside surprise is all MSTR shareholders. Like that's their juice. And right now, in bearish market sentiment, and people a little bit nervous about some of the recent, strategy activity with the USD reserve and selling Bitcoin and all that, the value being put on the upside surprise seems very low right now. And that's why you're seeing MSTR price very hurt. But then when we enter bullish sentiment again, people start to look at the MSTR common equity and the upside potential to vastly outperform their cost of capital, and people get bullish again, and then MSTR rips and outperforms Bitcoin. And that's the the swing teeter-totter that we see over longer periods of time.
Yep. I'm curious, did you guys have any thoughts about, there's discussion between Adam Livingston and Jeff Walton, just they were kind of riffing, and this is like another misstep that I think, people who maybe are bearish on strategy or strive, but are Bitcoiners, to the core make, is they'll watch like a live stream, like a True North live stream, or a live stream where we're here just riffing on this thing, and they'll just take things out of context. But did you guys have a thought? Jeff kind of got attacked. You could tell he was like thinking in the moment, like, oh, there's this world where SATA or STRC become a kind of digital money, and that's a place where you can park your cash, and it's better than holding dollars because people will just buy something that pays a dividend on it, like a money market. What did you guys make of that like whole critique? Did you catch any of it?
Yeah, I can start. I watched the whole thing. Fan of what both of those guys bring to the space. I think you're referring to kind of the digital credit as money conversation that they were having. There's a couple of conversations there that were interesting. Even just the term digital credit itself, I've actually had issue with from the beginning. Personally, I just call it Bitcoin credit over digital credit, just to make it a little bit more clear what's happening under the hood. But in terms of something like STRC um, or SATA being used as money in the future, I think the whole idea is that Bitcoin price volatility, and you can call it maybe the 10-minute transaction speed, is too slow and therefore too volatile in price to be used as money in real peer-to-peer transactions. I do think Lightning Network aims to solve some of these things. So some of the the layer twos on Bitcoin itself might solve for the true medium of exchange use case. So, for example, if Lightning gets fast enough that transactions are instant, well, then there is no more Bitcoin price volatility, because as soon as you hit send, you know that you're sending the price you're sending at. So, um, I'm not sure I see a world where digital credit is used as money, because I'm also not a fan of this idea that like we're going to have tokenized Tesla stock and you're going to buy your coffee with, a micro shares of Tesla stock. I just don't see it. I think the whole point of money is you want the thing that provides the most optionality. And if, I'm paying for something and a business either hasn't heard of STRC or maybe prefers money, and they'll go buy an amount of STRC at the time of their choosing. They want the most baseline optionality out of their money. So I think people want to buy things under their own terms and not kind of be given an entry price or a certain ticker. So I'm not a fan of that idea in general. I think, that's why people want dollars over anything else right now when you go to buy something, is because the dollars present the most optionality for them to then go buy whatever they want at the price and the time that they want to.
Yeah, I see things like that, technologies like that in the future, maybe as more of a convenience for the buyer, and maybe there are platforms or something like Jack Dorsey's company where you can pay that way, but there's option in just the same way you can pay with Bitcoin through their Stripe term, not Stripe, block.
Square
Square,
block.
yeah, through Square's terminals. The merchant ultimately has the final say of, are we going to get paid in Bitcoin? Are we going to get paid in dollars? And the salability, is the key component there. I think the rest of that is just like really interesting, cool little technology products, and more of a convenience for the buyer. So yeah, I think you hit the nail on the head there, Chase. Yeah, did you guys have thoughts about that? Go ahead, Eve.
Yeah, I have a couple of thoughts, because I think it also depends on timing, right? We always picture the end game or how it's going to end, but I think there's going to be a transition phase, and I think I tend to agree with Chase partly, but I also agree with Jeff, right? Because I think we're going to see a transition phase where potentially people are still going to be a bit hesitant into going into Lightning or other really like layer 2 or layer 3 Bitcoin. Although you could consider SATA and STRC also a certain layer on top of Bitcoin, right? I mean, it's powered by Bitcoin in a sense, but and these products will not exist forever, because at some point, if you really imagine a world where it becomes hyper Bitcoinized, then these products don't make sense anymore. So, but during that transition phase, it could be that you transact with a tokenized SATA or STRC. I would picture it. I wouldn't do it, because I still think Lightning Network is way more useful. But there might be people that will do that. And I think if you go back to one of the Hayek's comments, right, that there will be competition in in money. And we tend to see, oh yeah, that's Ethereum, Solana, and all the cryptos and all of this. But I think there could be competition within Bitcoin, right? I mean, you have Lightning, you have Liquid. Why not also have SATA and STRC compete among these things? It's just different type of sort of layer or money on top of Bitcoin, right? So I could picture it happen, and yeah, I think it's just again one of, I don't know if you guys have seen this talk by Andreas Antonopoulos, right? Where he mentions infrastructure inversion. And by the way, for the audience, if you haven't seen it, I highly recommend to watch it on YouTube. It's one of his talks. He's actually here in Zurich talking. There's nobody in the room, and he mentions exactly how at first you're using the old technology for the new technology, right? So in the case of Bitcoin, you're paying your fiat to buy some Bitcoin, but eventually that's going to change, and Bitcoin becomes the fundamental layer in various aspects. And yeah, so I encourage you to watch. And initially I thought, oh, that's just for payments, but what if capital is all around? And that's where Bitcoin treasuries make sense as well, right? You have capital being built on top of Bitcoin. It's not just payments only, right? So yeah, these are just a couple of my thoughts. And again, highly recommend watching this talk by Andreas.
Yeah, cool. I want to bring up another tweet
One-
kind of in. Yeah, go ahead, Chase.
Well, yeah, just one last thing on that is, so there's, for the receiving party, we talked about it, you want the saleability of money, the optionality, maximum optionality of money. But for the spender too, I think, we would all agree the reason you don't see people wanting to spend Bitcoin on coffee unless they're just believers in, spreading the Bitcoin story and experience to others is that you would rather spend your dollars or your local fiat currency because you believe that that is losing its purchasing power faster, and that's your hot potato that you're trying to get rid of. So if I was holding STRC, why would I why would I spend my STRC on something if it's literally spitting out a dollar denominated dividend? I have those dollars. Like the assumption is that if I already own STRC, I have some amount of fiat denominated wealth that's at least coming in every day. Why wouldn't I be spending those dollars? So I think you get back to the issue on both sides. The receiving party wants the maximum saleability in what they're receiving, and the spending side wants the weakest currency, the most quickly devaluing, debasing currency to be used as their spending. So that's, those two things combined creates a challenge for me in seeing digital credit as a medium of exchange.
Yeah, good point. I'm just going to bring up one more tweet, not to beat a dead horse here, but I think we've covered this largely, and Parker Lewis has been making a lot of noise, talking about, I guess, just bearishness of the Treasury strategy. He was replying to Joe, who was saying, there's OG Bitcoiners out there thinking Bitcoin's going to appreciate less than 8% annually, and therefore won't offset the dividend obligations. And Parker's saying, this is gaslighting. Obviously, he thinks it's going to increase more than 8% a year. He said his fundamental thesis is that if you sell Strive stock and buy Bitcoin, you're going to get more Bitcoin. And I don't know, what's the fundamental understanding? Is it just that, does he not understand that increasing Bitcoin per share is a thing that strategy is targeting? Is that what it boils down to, Quentin?
Yeah, I don't know. Difficult to say. I think it goes back to the discussion we had before. For me, it's really hard to understand how someone bullish on Bitcoin can be bearish on Strive and strategy. I don't know. Yeah, difficult for me to understand. It's just, yeah. I mean, if you just look at the numbers, right? I mean, strategy is approaching 1 million Bitcoin on their balance sheet. They might reach it this year. Most likely they will reach it this year if they continue to accumulate the way they did so far this year in a bear market, right? And if you think Bitcoin is going to 1 million, they'll have a $1 trillion assets balance sheet. And I mean, I don't know. I don't know how you can think this would fail.
Yeah, it's hard to be bearish on it once you see it, certainly. So guys, we're about we're 7 days five full trading days until daily dividends come to capital markets for the first time. Um, with price sentiment down, looking at SATA, um, just want to take a look at the current price there. We've got, I guess, STRC is at $95. SATA, I'm having a little bit of lag here, but it's trading at 96.30 or so right now. Um, are we going to see the snap back to par after the dailies come in? Like, there's got to be some drummed up interest here, right? Who want to capture these daily coupons? Yeah, does it matter that Bitcoin's price is down? And what's I guess for fun, like, what's your prediction on when SATA is going to hit par again?
Yeah, I can
I think
maybe
it
go first here.
depends on Bitcoin price. For
Yeah.
me, as mentioned, if Bitcoin continues to tank towards 50, 40, 30,000, I think it will be difficult to reach par in that time. If Bitcoin's flat or goes back up, it will be quick.
Yeah, I was going to say exactly the same. I think it's mostly on Bitcoin's price, right? And it doesn't need to go up or anything, as Quentin mentioned. Just probably staying flat and going slightly up. A bit of chop solidation, as Checkmate mentions, should be sufficient for it to go back to par.
Yeah, I think so. That's what we saw, from February until the end of May, right? It's just, it was choppy. We were trending upward, and that certainly helped after the dip. But I mean, that's Bitcoin's going to chop around to up probably over the coming months. It's just, I think it's kind of a shame that, we've got this big event, this big news drop that daily dividends are coming, and then like, no one's going to buy it for a little while. I just kind of lament that fact, that it's not going to get pushed up over par or to par, so that Strive can really raise money off it. But that's inevitable, right? It's going to come. The longer this product is out there in the market, the longer this pref is out there paying dailies, more people are going to see it. Like we say this a million times, but the longer the product's out there, the more dividends they make and don't miss, the more likely they're going to make the next dividend payment and the next dividend payment. And I'm just really, really excited for the potential of this product, and I think it's going to break a lot of people's minds. Like, SATA's already, you can trade SATA pretty much everywhere in every brokerage account. Like, they already kind of cleared that hurdle in the past, several months. So, like, you can get it in Robinhood. People, like, retail's going to love this thing.
Yeah, I thought it was really cool what Jeff highlighted in the announcement of the daily dividends with Strive, which was the idea that, like, I think it was like 6 or 7 months from now, Strive will be able to claim that they, assuming that they continue to make the daily dividend every business day, that they have issued the most consecutive dividends out of any company in history, even going back to the very first, I forget which company it was. I think it was like a real estate based company that has been providing a dividend monthly for 20 plus years. And so in just like 6 or 7 months time, they will be able to claim the most consecutive dividend payouts. So that's got to be good in terms of track record and branding, but just a very interesting thing to think about how we talk often about how Bitcoin lives in these much faster cycles because Bitcoin in total trading time has been up, I think, longer than the New York Stock Exchange at this point, just because it trades 24/7. So now you're looking at that kind of applying to dividends, where a daily dividend company is living in these like super, super, super fast cycles, and it can live, in 12 days, it lives a normal dividend company's year, right? Because a normal dividend company will issue a monthly dividend, and Strive will soon be issuing, 12 dividends in 12 days. So, well, maybe not quite 12 days, business days. So, 14, 15 days, but in 2 weeks, they'll live a year worth of another dividend paying company's obligation. So just super interesting. And, we often hear Strategy and Saylor talk about frequency when thinking about these products. And yeah, frequency just got ramped up to the maximum, and it'll be really cool to see.
Yeah, can't wait to monitor it. Interesting thing from the price crashing in Bitcoin and Stretch and SATA dropping is there's There's Apex has been saying, we're buying the dip, which is really interesting to see. Apex, of course, if you don't know, is a DeFi protocol, a savings coin that buys different tranches of digital credit, and I think they're even expanding into um, some non-Bitcoin backed digital credit products as well. The guys who run that also run a Solana digital asset treasury. So you got to know what you're investing in, but their product, it doesn't seem like has really been tested by almost 10% drawdown with STRC. So I mean, those are good signals. What do you think a real test of stretch looks like? Can like I think Chase, you were making the point is that fixed income investors don't mind momentary blips here because if you're looking just to clip twice a month coupons on stretch, if you get rugged 5%, 10% over a short time frame, a month or 2 months, it doesn't matter because you're getting your income and you'll be able to trade in and out of this thing eventually as time goes on when it does get tested. But is this like the max pain that you think a product like Stretch can feel, or are there scenarios where it gets tested a lot more?
It's a good question. I mean, it's hard to think about what would test STRC more than massive Bitcoin drawdown, a sell-off of the USD reserve, and a selling of Strategy's Bitcoin, all basically in a 7-day period. So like if you'd told me that all that was going to happen in the same week and that it would bounce down to 91 and then already be ticking back up to par, I'd say that sounds like it's working. And honestly, maybe that's the inoculation at a higher level that Saylor is trying to do, which is say like, look, this bear market, we're going to show you just how bad everything can be and how those dividend obligations keep getting paid. Like we're going to almost make it hard on ourselves. We're going to maybe purposefully trip over ourselves, do some, bad investor relations communication. We're going to like really almost purposefully misstep, but in small calculated ways so that a year from now, when we're back in the bull market, we can say, hey, look, we had a week there where XYZ happened, and then we traded back up to par 20 days later. So anybody that was worried about the principal protection of the digital credit instrument knew that, yeah, they were getting paid to hold until they were back at the point where they could get out of the position, with that principle fully intact. I look at these products and I'm thinking these are nice products to be holding during an extended bear market. You could have 100K of Bitcoin and it's 100K of Bitcoin, or you could have 100K of STRC and you could be taking those dividends that you're earning and be DCAing in during a prolonged bear market. And I think that probably we're seeing some of that where maybe people are accepting that this might be a prolonged bear market. They're in STRC or SATA, but that maybe then we're going to see the cycle back out as sentiment turns bullish again. They're going to be like, all right, time to switch out of my STRC and get back into raw Bitcoin. So it'll be interesting. I think that could be like a continued cycle if the cycle theory of Bitcoin plays out, where we do just have, whether it's business cycle or Bitcoin supply shock based cycles, that people are jumping in from Bitcoin into digital credit during the bears and then back into Bitcoin when they feel like we're ticking up again.
Yeah, Eve, I'd like your take on this. On Friday, that's when Stretch really got tested the most, and it was down. It touched just below 91 briefly, and it traded well above its average volume. It didn't trade. It didn't trade like the billions that it traded in mid-May coming up on ex dividend, but it traded about $700 million by my quick back of the napkin math. So there are people selling. There was a lot of people stepping in and buying, of course, too. There's two sides to every trade, but what's the profile of the person who was selling? I heard a lot of chatter on X, and I don't it's impossible to know. Obviously, who holds this thing is largely opaque, other than 13F filings that we get and reports that 80% of it's retail from Strategy. But do you lend any credence to the fact that people might have been selling Stretch to buy the Bitcoin dip, and it's like, okay, um, Stretch is only down 5-10%, and it makes sense to when we're in a Bitcoin bear market, some of the people who rotated into Stretch for that steady dividend payment, maybe were like, oh, this is a great opportunity to buy Bitcoin. Do you think it was panic sellers, or do you think there was more rotation into something like Bitcoin or strategy?
Maybe just one point to Chase's things that he mentioned before. So you're basically saying that the last couple of weeks have been a whole marketing stunt from Saylor, basically to show that Stretch can handle anything.
If you want to be generous, it would explain a lot, but that's like saying they're doing bad on purpose. But there could be an argument to pressure testing all of these various levers in this bear market to show in the bull, like, yeah, we're impenetrable.
Yeah, no. Yeah, so sorry, Tyler, just coming back to
Yeah,
your
no.
question. No, so I think there's obviously various things to consider, right? Because we also heard that there were, or I didn't look up the data on this, but there was mentions that there were also people shorting STRC, right? Which I found it quite interesting, because if you're going to short something, you might want to short something that's maybe more volatile and that doesn't have such a high dividend. So this one I still need to digest a bit. So potentially there's just some players that are playing games as well with STRC there behind, and that's something to be on the lookout. But yeah, I would see definitely Bitcoin holders that had STRC on hand, and they said, hey, look, STRC just fell what was it, 9 or 8 or 7%, and Bitcoin is down. I don't know, what was it, like 15 or 14%, and they just rotate, or potentially even rotate into MSTR or other Bitcoin treasuries as well, right? But yeah, it seems that at least the usual holder still sees Bitcoin as the major factor, because when you look at last week, yeah, it's very evident that it's still very correlated to Bitcoin. So yeah, it's going to be interesting to see the bounce back, I think, right now that we're looking at, because Bitcoin hasn't really recovered much, but we already see some relief on STRC and SATA, which indicates, as to Chase's points, is that these instruments work as intended, because there's buyers that are coming in and piling. So that's good. And even more interesting will be once they have those semi-monthly and those daily, because now suddenly the volatility should decrease. So it's going to be interesting to see what happens then when Bitcoin starts having some weakness. What happens to those products, I think.
Yeah, good point. Sandeep Sar in the comments was asking, what do you think about the fact, touching on the same point that you made about people making STRC an easy short at $100 because it won't go above 100. Of course, as Sandeep Sar and you both know, there is the carry cost there when you have to pay dividends if you're holding through the record date, which is certainly something that would discourage people. And then usually right after that record date, the price is dropping already anyway. So I'm sure there's people out there who have like maybe some machine-based trading algos that can clip a little bit. But I mean, the opportunity cost of trading, a product like this, I've got to imagine is makes it pretty high. Like there's probably not a lot of juice to be squeezed if we do see this continually returning to par. I'm sure people are going to try every strategy under the sun when it comes to trading, but I just don't see it as a big major trade that people can really execute on unless they're kind of front running a price drop in Bitcoin's price and expect the price to crash. So I think it's really a temporary thing. I wouldn't read too much into it. Shout out to all the people leaving comments. Jose Alfonso, one of our big fans, leaving lots of words of wisdom in there. He says he got into Bitcoin because of Michael Saylor and he's staying with him to the end. Great stuff. I love it. Thanks for hopping on with us, guys. Chase, Eve, had a great time. Quentin had to drop off, but we'll see everybody next week. And the Bitcoin Treasury Takeover continues. They're taking over capital markets, and we're covering it all. Take care.